Households net worth fell by 4.7% in the third quarter. New unemployment claims highest in 26 years. A Fed report shows that households' net worth fell or has fallen by 4.7% in the third quarter to $56.5 trillion, reflecting the hit Americans are taking as the value of their homes and investments decline. A country in decline. New claims for jobless benefits rose much more than expected last week, exceeding even gloomy forecasts for an economy stuck in a recession that seems to be deepening. Yes, deepening rapidly. The Labor Department has reported that initial applications for jobless benefits in the week ending December 6 rose to a seasonally adjusted 573,000 from an upwardly revised figure of 515,000 in the previous week. That was far more than the 525,000 claims Wall Street economists had expected. And elsewhere, the U.S. trade deficit rose unexpectedly in October as a spreading global recession has dampened the once strong sales of American exports, and the volume of oil imports surged by a record amount, the Commerce Department has said. And more layoffs have been announced. New Britain, Connecticut-based toolmaker Stanley Works said it plans to cut 2,000 jobs and close 3 manufacturing faculties, while Sara Lee Corporation, known for food brands such as Jimmy Dean and Hillshire Farm, said it will cut 700 jobs as the Downers Grove, Illinois-based company outsources parts of its business. The Bank of America has announced it will cut 35,000 jobs in the next 3 years. And new jobless claims last week reached their highest level since November 1982, though the labor force has grown by about half since then. The trade deficit rose to $57.2 billion in October from an imbalance of $56.6 billion in September. Economists had been looking for the deficit to decline on lower oil prices. Oil prices did drop by a record amount, but that was offset by a record surge in the volume of oil imports. The lower the price goes, the more people buy. That's just the way it is. So much for conserving anything at all, or actually having anything new, or building anything new. The reports, along with investor concerns that an auto bailout bill may not pass the Senate. Well, even if it does, sent stock markets slightly lower. A jump in initial jobless claims is partly due to a rebound in claims from the previous week, which included the Thanksgiving holiday, the Labor Department has said. Still, the 4-week average, which smooths out fluctuations, was a seasonally adjusted 540,500, the highest since December 1982, when the economy was emerging from a steep recession. But this time, this is different. There's never been a time like this before, and there'll never be a time like this again. Stepping back from the short-term noise, it is very clear that the underlying trend in claims is still rocketing or taking off as companies throw in the towel and go bankrupt and prepare for a long, deep recession. Very deep. Said chief U.S. economist for high-frequency economics. The The number of people continuing to claim jobless benefits also jumped much more than expected, increasing by 338,000 to 4.4 million, the Labor Department said. Economists expected a smaller increase to 4.1 million. As a proportion of the workforce, the number of people continuing to receive benefits is the highest since August 1992. The increase in continuing claims was the largest jump since November 1974. Economists consider jobless claims a timely and volatile indicator of the health of the labor markets and the broader economy. Last year, initial claims were 337,000, but it's getting worse. Again, rapidly. The figures come a day after the Treasury Department reported a record budget deficit for November, driven by lower tax revenues and higher spending on programs such as unemployment insurance and food stamps. In just the first 2 months of the budget year that started October 1st, the budget deficit totaled $401.6 billion, nearly matching the record gap of $455 billion posted for all of last year. So, yes, in just 2 months, well, that's not good news, of course. Economists expect the deficit will top $1 trillion or more in the current budget year, which would be a post-World War II high when measured as a percentage of the economy. And of course, the economy has been hit hard by the ongoing housing slump and financial crisis, which have sharply reduced household wealth as stock prices and home values have declined. Consumers and businesses have also dramatically cut back their spending. The National Bureau of Economic Research said this month that the economy fell into an official recession in December 2007. Well, actually we've been in recession for a while. The Labor Department said last week that employers cut a net total of 533,000 jobs in November, and the unemployment rate reached 6.7%, a 15-year high. The rate would have been higher except that more than 400,000 Americans simply gave up looking for a new job and weren't even counted in the labor force. So it's actually probably worse than they're saying. The latest jobless claims figures indicate that the December unemployment rate could be at least as bad as November's. Could even be worse. Companies have eliminated a total of at least 1.9 million jobs this year, and some economists project the total cuts could go much higher. Yes, next year it could get worse. Anyway, all these things are connected or interconnected, and there is something wrong with the economy of the United States, which in turn, well, then there's an economic ripple effect to all the other economies of the world. If the U.S. economy is doing bad, then so does the world's economies do bad, because they're all connected. Everything is connected, and things do happen for a reason. And on top of all that, this is about something bigger, much bigger. Yes, it's coming. Something much bigger is coming. And all these are more signs of the end times, transition days. And once again, there are many, many signs. All one has to do is look around, watch the news, and, well, they need to read the Holy Bible, because everything is connected, and it's time